Good day, everyone, and welcome to Vietnam's Holding Investor Presentation. At this time, all participants are in a listen-only mode. Later, we will conduct a question and answer session through the phone lines, and instructions will follow at that time. Alternatively, participants can submit written questions using the Ask a Question button on the webcast page. I would like to remind everyone that this call is being recorded. I will now hand over to Craig Martin, Executive Chairman of Diamond Capital, to open the presentation. Craig, please go ahead.
Great. Well, thank you all very much for joining. I know it's a busy time of the year. We've got a tax year just starting, and also we're celebrating Ramadan, Holi, Passover, and Easter's just around the corner as well. So appreciate people joining the call this morning, as well as watching it later on the replay. I'm Craig Martin, Chairman of Dynam Capital, and delighted this morning also to be joined by my colleague Tan. Tan recently got married, and the team, we're 15 people on the ground in Vietnam, celebrated his wedding. We celebrate life events at Dynam Capital. We also celebrate strong performance in the funds that we manage, and we're delighted to bring you an update on Vietnam Holding and its outperformance. Next slide. Usual disclaimers apply. Next slide. So one thing we were also delighted to receive at the end of last year was a couple of awards. One from Citywire for Best Emerging Market Single Country Trust. The three areas that they measured our performance on over 3 years, one was 3-year shareholder return, just over 103%. Secondly, 3-year net asset value growth. This was 92% as they were looking at the performance data. It's gone up since then. And also an information ratio of 1.24. Now, information ratio, anything above 1 is great. It's fantastic. That's the measure of the consistent outperformance against the index. That's something we're very proud of at Vietnam Holding and for us as the fund manager. Next slide. So actually the outperformance goes back more than 15 years. The fund was started in 2006, but for the 15 years that we measure here, there's strong outperformance, almost 13.5%. Versus the index. And that outperformance is the same over 1, 3, 5, and 10 years. So 13.5% over 15 years. And I think if you look over 5 years, also about 13.5% increase in NAV, way beyond the index, close to 500 basis points of outperformance. So we're an award-winning fund and fund manager. We're actively managing our portfolio, and it's a high conviction portfolio. We've got about 25 portfolio companies, and we'll introduce a few of those to you this morning. Largest holding around about 15%, and we don't use any gearing in the fund. The fund listed on the main board of the London Stock Exchange under the ticker VNH. Around about 100, I think today about 110 million pounds of market cap closed-end fund. As with most closed-end funds, it does trade at a discount to its net asset value on the London Stock Exchange, but a very narrow discount, around about 6%, which is the narrowest of the 3 London-listed Vietnam funds. And there's a good reason for that. The reason is that the board of the fund, who are very independent to us as the manager, conduct regular share buybacks. And also with shareholder approval in December, there's a redemption facility. So investors have the opportunity once a year, starting this September, to redeem some of their shares, or all of their shares if they choose to, at NAV, at NAV. And I think that's helped narrow the discount. For many years, we've been at the forefront of responsible investing in Vietnam, advocating good ESG to our portfolio companies. And we do this for very selfish reasons. We think the companies that can manage themselves better on guidelines around investor transparency, governance, and reporting will get better rewarded. They'll get better valuations. And so for us as a fund manager, our ESG is something we believe in, and we believe it can also drive strong alpha in our portfolio. We do a lot of measuring. We believe that we should measure more and report more. So we measure our carbon footprint. which on average has been well below the index. And since 2009, we've been a signatory of the United Nations under their Principles for Responsible Investing, and are getting very strong scores in that reporting. The themes are across the core parts of the Vietnam story, which myself, my colleague Tam will take you through. That's the industrialization journey that Vietnam's on. The government wants Vietnam to be a modern industrialized country. And that's played out in that many things are made in Vietnam, manufacturers producing goods for the world from Vietnam. The rise in the consumer is also a great investment opportunity for us and a theme, as well as urbanization, the changing nature of the country. We have a high active share, so we're not an index, although we report our outperformance to the index, but we're an active, on-the-ground, focused investor, and we can navigate across the small, the medium, as well as the large opportunities that we see in Vietnam. So we're very flexible and very nimble. Next slide. Next slide. So a snapshot of Vietnam, a large population, 100 million people, young, half the population under 33 years of age, a digitally savvy and increasingly digitally connected country, more than 77% internet penetration. There are more than 77 million Facebook accounts in Vietnam. There are more Facebook accounts than there are bank accounts. Clearly, that's something that will change over time. It's a highly literate country, and there's a big focus on education. 40% of Vietnam's graduates are in science, technology, engineering, and maths. So there's a big focus on generating the human capital, as well as the other forms of capital within the country. A country that's had very strong GDP growth over the last 30 years, 5% last year, maybe 6.5% this year, and record levels of foreign direct investment, which my colleague Tam will touch on, as well as remembering that Vietnam is an open economy. Trade, import and exports, almost 160% of GDP. So it's set itself out on the stage to be a key part of the global supply chain. So you will see more and more made in Vietnam. I encourage you to always look at the labels on the goods that you buy and spot the country. And many of those now will be made in Vietnam. Starting 30 years ago from commodities and simple products, but over the last few years, increasingly digital goods and software and services, which we'll touch on as one of our largest holdings, is well positioned in that technology and software space. Next slide. At this point, I'll introduce my colleague Tam, and Tam will talk to us about the macro and the market, and then hand back to me at the end to talk about the portfolio.
Thank you, Craig, for the introduction. Yes, now let's talk about let's update the macro picture of Vietnam and how we explore investment opportunities, which is related to the three investment themes that Craig just mentioned: the urbanization, the consumption, and also the industrialization. So the first, I would like to talk about the manufacturing, which is one of the key growth driver of Vietnam for the last 2 decades, and how Vietnam can continue to depend on this sector. You can see that the manufacturing output of Vietnam continue to grow, and now it's already surpassed the total GDP more than 100%. And the total export of Vietnam is also nearly 100% of the total GDP. And it would be the growth driver in Vietnam in the next few years. Next slide. Yes, let's talk about the export and import. Vietnam depends a lot on the export. And in 2023 and in 2024, we expect that the recovery of the export would be the key growth driver of Vietnam. In 23, Vietnam achieved a record high number of the trade surplus, which support the currency of Vietnam. And we can, in the first 2 months of 24, we observed that the strong recovery of major export market of Vietnam, especially in the US market, one of the key export market of Vietnam, with the growth of more than 30%. Next slide. FDI, yes, a long story of Vietnam. Vietnam is the hot spot of the FDI attraction, and the story would sustain. It's not just about the labor-intensive sectors like in the past 2 decades, but now Vietnam's is a story of the AI-related sectors and also the renewable energy. In 2023, Vietnam, the FDI inflows more than 23 billion US dollar, the record high number in history. 24, we expect a similar number and even higher, and especially the more investment in the AI related and renewable energy. We have seen the numbers of projects already registered in Vietnam in 23, more than 36 billion US dollars, and we expect that it would be disbursed. The money would be disbursed in 24 strongly. Another key growth driver in Vietnam is from the domestic, the public investment disbursement. In 23, we also see the record high number of public investment disbursements, 24 billion US dollars, and about 80% in infrastructure, especially for the backbone highway system of Vietnam from the north to the south. And we have seen the strong commitment by the government to continue to follow the plan. In 24, we expect up to 30 billion dollars in public investment, and the low debt level of Vietnam is just about 33% of the total GDP would enable Vietnam to achieve to meet the plan. Next slide. Yeah, let's talk a little bit about the long-term outlook of Vietnam. In 24, we expect that the GDP growth of Vietnam would be back to the long-term level of about 6% to 7%. And with that pace of growth, Vietnam would become a top 20 economy in the world. And it's very much related to how we explore investment opportunities in Vietnam. It's the urbanization and also the industrialization, which is the result of the high growth, especially in the real estate development and also in the industrial services. In terms of consumption, Vietnam is at an inflection point, which is very similar to China and also to Thailand. At the GDP per capita of more than 4,000 US dollars, where Vietnam is today, China and Thailand would double its GDP per capita, where Vietnam is today in 5 years and 7 years. And we expect that Vietnam would become one of the most attractive consumption market in Southeast Asia. And Vietnam is already now one of the biggest ones in the Southeast Asia area. Yeah, next slide. Urbanization, another thematic exposure that Craig already mentioned, is also at an inflection point at the level of about 40%, which is very interesting. That is the level of Europe after World War II, and is the level of China in 2000. And in China, as an example, would double its urbanization rate from this point in 20 years. And it would make the urbanization rate rapidly growth would provide a lot of opportunities in the equity market of Vietnam. Next slide. Let's go back a little bit to update how Vietnam could catch up the opportunities for the long term, and the financial position of Vietnam to catch up on that opportunities. In terms of FX reserve, it's very healthy, and Vietnam could still maintain a healthy level of FX reserve of about 100 billion US dollars, which is about 3.5 months of import. And the currency of Vietnam is also stable managed. It is supported by the sustainable trade surplus, the strong FDI, and also the strong remittances in Vietnam. And we expect that, even though we expect that Vietnam could depreciate it a little bit in 2024, but will be stably. And it's actually, it would be support the export growth of Vietnam in 24. Next slide. Just a very brief outlook on the monetary policy of Vietnam. After a small crisis in the corporate bond market in 22 and 23, the liquidity in the systems were back to normal. And actually, the interest rate of Vietnam is now back to the record low level in many years. And the interbank rate is now at the record low level. Vietnam continue to follow the easing monetary policy and the easing fiscal policy. And we have, despite that, Vietnam cut rates in the second half of last year. However, the effect would be stronger, we expect, in 2024. Next slide. Inflation, just a brief look. We don't think that inflation is the major risk for Vietnam in 24, given that the global inflation risk is already subdued, and also because of a low interest rate environment of Vietnam in 24. Next slide. Yes, it's the very brief outlook update and outlook of the macro of Vietnam. Let's talk about the recovery of the equity market. Next slide. The correction in 2024 was followed by a very nice rally since then, and we have seen the return of the investors, seeing the recovery of the market, and now the liquidity of the market has been stably at around $1 billion, which is very high if we consider Vietnam as a frontier market. However, the classification of a frontier market is no longer is the case for Vietnam, because now Vietnam is now one of the biggest weighting in the MSCI frontier market index, and Vietnam is about to be upgraded, we expect, by FTSE Russell by 2025. The government has been working, and they show the commitment to let Vietnam to be upgraded to the emerging market by FTSE and also by MSCI. We foresee that one of the key obstacles for Vietnam to be upgraded is the pre-funding removal, and this is about the draft to remove the pre-funding requirement already present to the National Assembly it's very, we expect that would be very soon. The second update is the operations of the new trading system in Vietnam, which is the trading system called KRX, and would be the strong platform for Vietnam to add more products and also to enable the pre-funding removal. The valuation, in terms of valuation, even after the nice rally of the market since 2022, we still consider Vietnam is trading at a current attractive valuation for the long term. Not to say that we expect 24 the market could achieve about 20% to the EPS growth for 24. Next slide. In terms of valuation and also in terms of profitability of Vietnam relatively to other market, Vietnam is offering good opportunities for equity investors. Next slide. Now I would like to hand over to Craig for the portfolio of Vietnam Holding and also a number of company spotlights.
Thanks, Dan. Next slide. So we're both focused on the macro picture, the top down, but actually our DNA is the bottom up, trying to find great companies that can have a compound earnings of 20% and above, but also businesses that are prepared to listen and adapt where needed, particularly around ESG. And as I said at the beginning, that's not just to feel good or tick a box, that's to see a transformation in business practice, greater reporting, adding investor relations teams to their executive, looking at putting committees on the board, changing the roles of some of the board directors, bringing in independent directors. And we've seen real change over the last 4 or 5 years, and we've continued to engage with each of our portfolio companies. And although we're a relatively small investor in the scheme of the size and the growth of Vietnam's equity market, we listen to and we provide an authentic point of view to our portfolio companies. Next slide. As Tan said, the growth in the equity market is robust. We're looking at north of 20% EPS growth for 2024, and yet a PE across the portfolio of around about 10 times. We can navigate, as I've mentioned, the small, medium, and large opportunities. Some of our portfolio companies, when we invested, there were about $100 million in market cap. So they were in the small or the small to mid-size, and now they're large. So we don't have to sell those companies just because they've become large. And likewise, we're able and interested in looking at those new rising stars. That's those smaller companies that have good management teams, good moats or great positions in their market, and the ability to compound their earnings such that over time they will be the next large caps in Vietnam. Next slide. So the key themes that Tan and I have spoken about: the industrialization, that's businesses looking to manufacture in Vietnam for export. Now, we're not trying to find a great single factory that produces Apple headphones or the next greatest Nike trainer or what have you. We're looking at the business to business building blocks, the logistics, the shipping companies, the air cargo companies, and the domestic services that underpin Vietnam's move to made in Vietnam, and also benefiting as people perhaps reallocate some of their factories and their production from countries such as China. The urbanization story that Tan and I have presented, we really play out both through some key real estate developers that have been in our portfolio for many years, but also urbanization plays out into how the cities develop, modern trade and how that improves, services and demand for clean water and energy as the cities become bigger and as people move from the countryside into the urban areas. And then the domestic consumption, we're looking for category champions in the retail side with branded goods, or indeed through omni-channel, so digitally enabled retail as well as the bricks and the mortar retail. And a lot of this is then underpinned by the growing financial services. We mentioned that Vietnam's underbanked. There are more Facebook accounts than bank accounts, but that, of course, will change. And as the banks also adapt to technology, we're trying to find good businesses in the banking sector that can play a part and act as the kind of catalyst for all of the other themes that we're invested in, as well as being a great leverage play on the economic growth in Vietnam. Next slide. So if you look at our portfolio, and this is taken as of 31st of December, which is in line with the interim report that we published last week on Vietnam Holding. I do encourage you to go to the website vietnamholding.com and download a copy of that if you haven't already, or look there on that website. There's a wealth of information about our reports and about our approach to investing. Here in the snapshot of the top 10 holdings, you can see that it's concentrated. There are 1,600 companies in Vietnam that we could invest in theory, but out of that, we have a smart universe of maybe 60 to 80 companies. We've got about 25 companies in the portfolio today. There's maybe another 15 companies in the wings, businesses that we've been invested in. We've taken profit and we're waiting for the next stage, the next catalyst for their growth. And there's probably another 20 or 30 businesses that we've been tracking over several years that aren't yet in the portfolio. So we have the quality problem of to put a new company into our portfolio, it has to be better on a risk-adjusted basis than the existing holdings that we have. So banks, although not a direct theme in itself, that underpinning sector to many of the other themes account for, today it's probably closer to 29% of our portfolio. At 31st December, it was about 25%. Telecommunications is that one company largely, that's FPT, which I'll talk about in a minute, a digital champion. And then we're broadly spread out across the other key sectors. We're somewhat underweight residential real estate. Tan mentioned that 18 months ago, there was a lot of shock to the domestic bond market, and that made it hard for domestic developers to access financing. We were already somewhat underweight, and we chose to express more of our real estate investment through industrial parks. These are companies that are set up to benefit from the move of manufacturers from other parts of the world to Vietnam. And that's how we're currently expressing our real estate exposure. So top 10 portfolio, just under 2/3 of net asset value. So we have high conviction, and we want to back our winners and keep a very close eye on our stock selection and our portfolio construction, which has driven our outperformance over several years. Next slide. So as we look back over 1, 3, and 5, we report our net asset value increase, which has been strong, 22% over 1 year as of 31st December last year, 40% over 3 years, and close to 65% over 5 years. And that's way ahead of the index, the Vietnam All Share Index. It's also ahead of the other 2 London-listed funds. They're much bigger in terms of their size, but we believe our nimbleness is also played out well across our portfolio. And again, giving that ability to us to invest across the small, the medium, as well as the large cap opportunities. So consistent outperformance over several years. Next slide. I'll now walk you through a few of our portfolio companies, just giving you the highlights. Again, more information can be found on the website, but just giving you a flavor of what we're excited about in the portfolio and how that plays to the growth prospects for Vietnam going forward. Next slide. So our number 1 holding, FPT, a digital champion. It's a business that operates across several very interesting areas. One is it's a solutions provider to large Japanese and US and European companies, taking advantage both of the capability of Vietnamese software engineers, but also of the lower cost compared to some of those other countries. So has the ability to provide software as a services, around about $1 billion last year in revenue. It's got an ambition to quintuple that to $5 billion by 2028. If you're aware of some of the great Indian digital champions, so Infosys and Wipro and TCS and other companies like that, they built similar businesses 25 years ago in the run-up to the Millennium Bug. They now generate maybe $25 billion a year in software sales. So FPT, relatively small, $1 billion, with ambitions to go to $5 billion, but it's been growing at a terrific rate, compounding 25% per annum for almost a decade now. It's also a domestic digital champion, providing broadband telecommunication services and data centers. It's also a retail digital champion, providing households and individuals with fast broadband at very cheap, compared to other parts of the country, cheap rates. And then finally, kind of underpinning a lot of that is its focus on education. It has now probably closer to 140, 150,000 full-time students with a big focus on science, technology, engineering, and maths. So this is a great company, and that's why it's number 1 in our portfolio, with good prospects, both domestically as the country digitalizes, but then also for export markets that are trying to catch up and re-engineer some of their core banking systems, for example, in Japan, or tackle a big change in backbone infrastructure. And FPT has got a great ability and a great team to deliver those kind of services. Next slide. Gemmadep's a key part for us of the business-to-business services in that industrialization sector. So not only is it a leading seaport operator in Vietnam, but also has a large stake in an air cargo business, so handling air cargo in addition to the sea cargo. It's a business that has really been focusing on its core activities over the last few years, and as a result, it's been divesting both some non-core assets as well as rejigging its portfolio of ports, selling older ports and then investing in more modern ports and getting those capacities up to high levels very rapidly. So we think Gemadep is well positioned both for the growth in inter-Asian trade from Vietnam and of course in global trade as well. Next slide. Military bank, it perhaps for some Western investors has a bit of a scary name, but it's a core bank and the 5th largest bank across many areas within the country. A very interesting activity or an area for military bank is how it has also focused on this digital transformation. And you could look at it also not only as a great bank and a cheap bank at 1 times price to book, but also a very profitable fintech company with almost 28 million online bank accounts. So a terrific company to track both for the domestic consumer and how they interact with banking, but obviously also as a leverage play on the broader economy and the development of Vietnam. So inexpensive bank, well positioned across many key parts of the market and good growth prospects. Next slide. IDICO is one of our industrial park opportunities. So it's working with the large companies from North Asia and elsewhere that are looking to take advantage of Vietnam's position, Vietnam's 15 free trade agreements, and also the rebalancing of global supply chains. And so you need good industrial park developers to be the partners for these Fortune 500 and these global companies. And IDICO is very well positioned in that regard. Obviously, there's been a lot of talk about global change in trade and, can the US bring everything back onshore? We don't think that's realistic. We think the US can nearshore. It can do onshore for some areas. It can nearshore back to perhaps Mexico and other markets, but it needs friendly shores. So suppliers are looking at moving to Vietnam as a key part strategically for their manufacturing. And so industrial park operators such as IDICO are well positioned to benefit from that trend. Next slide. FP Digital a few years ago was wholly owned by FPT, our #1 company. It was spun out into a separate business and listed in 2018. Its initial business was about digital retail, FPT retail. So in the UK, you've got companies like Carphone Warehouse and Dixons and other companies like that over a number of years that are retailing gadgets and accessories to consumers. Well, that's interesting in itself, but for FPT, for us, its move into the pharmacy segment is particularly of interest. And starting from a small number of stores, 70 stores just 4 years ago, it now has 1,600 stores. In the UK, Boots, the chemist, a well-known pharmacy chain, has about 2,100 or 2,200 chains as stores. So FPT, digital retail, its ticker is FRT, is trying to grow in that segment aggressively, increasing its market share, but also providing a range of products to the Vietnamese consumer. And as the Vietnamese consumer becomes wealthier, they will look, at health and investing in health, and also in accessing the wide range of products that the pharmacy chain has. Three times the number of products in terms of its range of its closest competitor. So we think this is a good play on retail. It's also a good play on the focus and the changing aspirations of the Vietnamese consumer. As per capita GDP, as Tan said, goes to now it's $4,000. That's an inflection point in consumption. Next slide. That consumption inflection point also means that people have more disposable income. And P&J, our jewelry business, is a key player in the branded jewelry segment in Vietnam, which is fast growing. P&J has over 50% market share, almost 60% now market share in the branded category. And the whole market is growing, as well as increasing penetration of trusted brands such as P&G. P&G's got close to 400 stores throughout the country. It's twice the number of its closest competitor, and has a range of jewelry products going perhaps from gold and more traditional jewelry for the older consumer, and then a range of more fashionable, more affordable items for the younger consumer. So this is a business that's market cap is almost 1.2 billion US dollars. When we first invested in the business, it was a tenth of that. It was close to $100 million. So it's been a compounder, and it's a business. We've had P&G talk to investors on some of our webinars in the past. It's also a business that has listened hard when we've spoken to them about their ESG and their reporting, and they're also at the forefront now of setting up ESG committees and to show that their contribution to the society, as well as their processes for managing their source of jewels, is world class. Next slide. So that's a snapshot on the portfolio. Tan and I, over the last half an hour, walked you through what we see as the good trends in Vietnam, what we see as the key investment drivers, and how we've selected the portfolio to benefit from that. A portfolio that's shown strong outperformance, and Vietnam holding the ticker, and the stock is also a narrow discount to its NAV. It's also, as a share, has performed very well. And so we do encourage people to visit the website, vietnamholding.com, or contact us for more information. And now we have a chance actually for some Q&A for questions that have been coming in.
At this time, there are no questions on the conference line. I will hand back over to Craig Martin to read out the written questions.
Thank you. We have a few written questions that have come in. Obviously, Vietnam's been in the news recently, and one of the questions was, we read that the president resigned. What does that mean for Vietnam and its economic development? Well, we don't see that it's a major issue. The president had been in place for about a year and has resigned, and there's some talk of historical scandals and corruption issues. That, I guess, remains to be seen. But in Vietnam, the president is more of a figurehead rather than as important as a key member of the executive. It does play into the second question someone's asked. We also read there's a big corruption trial going on in Vietnam, and indeed there is. There's an ongoing trial of a private individual who is facing many allegations of misappropriating assets, of misusing bond issuances to retail investors, and is on trial for misappropriating somewhere between $12 billion and $30 billion of assets, depending on what you read and how you interpret that. So serious offense. I think it shows that the government is very, very sincere in its efforts around anti-corruption, and also to prevent the capital markets being abused. And so that's ongoing, and we'll keep an eye on that. It doesn't have any immediate impact on the market or on our portfolio, but when the arrests were made some time back, it did cause some consternation domestically. As Tan mentioned, that the domestic investors are very important in Vietnam. About 90% of the trade flows. There's 7.5 million domestic investors. So their sentiment is very important. And so far, year to date, the market has been very strong. It's been on an uptick. We have a question specific to Vietnam Holding, the stock. A question about why is the discount so low compared to the other funds. Well, we don't talk about other funds. We just talk about Vietnam Holding. But certainly on a relative basis, the discount to net asset value is narrower. It's about 6%. I think last year, on average, it was about 12%. I think the other London funds are probably closer to 20%. And I would attribute that narrowness in part to the ongoing share buyback mandate, although that hasn't had to be used recently. But I would say it's predominantly due to the new redemption facility that was approved and introduced at the end of last year. So that gives investors the ability, the comfort that we may be a relatively small fund, 100 million pounds sterling of market cap, but we're a strong performing fund. And then once a year, there is an opportunity for investors, if they've held the fund for more than 6 months, to tender some of their shares at net asset value. So I think that gives comfort to investors that their interests are looked after by the board that's independent to us, the manager. And you can invest in the fund and you can exit the fund as and when circumstances may change. So that's one reason we believe the discount is narrowing. And of course, if we can get the discount closer to zero, we can obviously look at considering opening up and issuing more shares and increasing the size of the fund. But that remains something to be seen in the future. And then we have a question here about politics, global politics, and Trump and trade. The question reads: so, the world, 60% of the world's going to the polls this year. Many countries have already gone to the polls, Indonesia and several other countries. And obviously, everyone's watching to see what happens in the US elections later this year. We can only say that the last time there was a big upheaval in the US elections, the last time President Trump came in, or last time Trump was the president, Vietnam benefited, actually. There was a lot of China plus one activity, that is, investors and manufacturers looking at alternatives to China. There, it was under the trade tariffs that Trump broadcast quite heavily, and Vietnam saw benefits from that. So we think Vietnam plays this very good role and this difficult role of balancing its interests with the US and also with China, but we do see it's considered a friendly shore by the US. Last year, Biden visited Vietnam. Xi Jinping came in a month or so later. Trade with the US was put on the highest level, comprehensive strategic partnership. And I think the US is also trying to reciprocate and look at how it can engage more fully and fairly with Vietnam on trade. So I think whoever's in the White House voted in November the 5th and inaugurated in early January will still look at Vietnam as a friendly partner. And for investors, we're seeing that they're looking at Vietnam as an alternative, perhaps, to China for their manufacturing. And many investors are looking at Vietnam as a place that's a diversification to their portfolio in very uncertain times globally and politically with what's going on. And there's a question here, which I'll hand over to Tan, a question about the bond market. How big is the bond market? Tan, you'd mentioned there's a corporate bond crisis. How big is the bond market? And what are we saying in terms of stability in the bond market? Tan, do you want to talk to that?
Yes, the bond market is still quite small compared to the total GDP. And because of the quite easing monetary policies in 2016, so the bond market rapidly improved, and it's quite a booming market. So it's rapidly increased from like about 5% of the total GDP to nearly 16 to up to about 18% of the total GDP. But because of the change of the monetary policy quickly, so there's a crisis. And as Craig mentioned, because small crisis, but yeah, the government handled very quickly and intervened, and now we see the liquidity back to normal in the bond market. Yeah.
Thanks, Tan. I've got 3 other questions here that have just come in. A question about, can we add more color on how we engage with companies and improve their investor relations? I would say we've got good examples in the portfolio where over several years the team have engaged and suggested that there's a lot more focus on IR, on investor relations. Some Vietnamese companies are quite shy in terms of talking out about the good things that they've done. You could also interpret that perhaps some historically may be secretive around how profitable they are and their growth. But we've been making the point of alignment of interest with shareholders. And many of the Vietnamese companies have employee share option schemes. So stronger growth in their share price is valuable to staff as well as to investors. So we've seen the investor relations aspect improve. One of the key things also we've been pushing on is to have companies report more readily in English as well as Vietnamese. And that's something that the rating agencies, FTSE Russell and MSCI, look at. So, that's an area where we think it's relatively low-hanging fruit for these companies, and they can adjust and improve their behavior. Then we have a very interesting and yet perhaps a challenging question from Pierre Terron, which is, Vietnam's clearly got great prospects. What are the top risks to this? What keeps us awake at night? Well, I think one is what happens globally. So Vietnam has set its stand out to be a key part in the global supply chain. Import and exports are very important to Vietnam. And obviously that's been built on the 70-year experiment of globalization. And there are some corners of the world that talk about the end of globalization and the change to that. And clearly that does have impacts. And if you have someone coming into a political position where they want to put tariffs on every export or every country that exports to them, then Vietnam will get hit, as will the rest of the world around that. But historically, Vietnam's benefited. It's seen as being a preferable place for manufacturing with better trade tariffs. So, we're great believers in free trade and open trade, as is Vietnam, a communist country that's taken capitalism and also openness in terms of trade to be the levers to see the wealth of its people improve. But that's something that keeps us awake. Well, not at night, but we keep a close eye on. Also, the risks to trade, such as the Panama Canal, because of drought, is seeing reduced traffic. The travel through the Red Sea is difficult, so we see some issues there to maritime trade. Obviously, shocking when ships are attacked and human life is lost. But in addition to that, there's delays to trade transportation. So we think Vietnam also needs to look at how it can use air cargo as well. One of our portfolio companies has a stake in an air cargo business, so it may benefit. And I think a more difficult risk is the world is changing rapidly. Tan alluded to the growth in technology and AI, and Vietnam needs to keep up with that. It needs to keep focusing on its education, which to now has been very good, but also the government needs to continue to allow and provide incentive for investment in technology and developments in R&D. And obviously AI has some negative consequences as well. So in places like Hong Kong, China, and indeed in Vietnam, ChatGPT and these are not readily available and perhaps looked with some suspicion around that. So that needs to perhaps be addressed. And keeping up with the world's change, Tan mentioned that we may get an upgrade to secondary emerging market next year for FTSE Russell. But to get broadly brought into the MSCI emerging market world, I think it's going to take some time. And so seeing Vietnam do enough to get in is something that we're focusing on. The positive of this is that the government wants inclusion in emerging market indices. So Prime Minister and the Ministry of Finance, everyone's saying, do what you need to do, otherwise, get another job if you're not able to make this happen. So it's very interesting that you have a kind of conservative communist structure, but very much focused on using the capital markets to grow. So they just need to keep ahead of these changes. They showed good willingness to adjust to the challenges of climate a few years ago, adapting a net zero by 2050 objective. And as Tan has alluded to, we've seen a lot of investment into renewable energy, but there's a lot of red tape still and a lot of bureaucracy. So final part of an answer to Pierre's question there is they've got to address bureaucracy. And they're trying. There are some new laws in the real estate sector to remove some obstacles, but there's a lot more that can be done. The government has an objective to really do a lot by April next year. April in 2025 will be the 50th anniversary of reunification of the country following the wars. And so there's a lot of incentive and effort, I think, to make good gains on several fronts by next year. So there's a lot of positive things to talk about. So we are keen and excited to see further public expenditure get unleashed, which Tan mentioned could be a record again this year. And that benefits, that has a multiplier effect. But consequently, delays in that can create bottlenecks. So that's one of the areas that we want to worry about and keep a close eye on. And there's a question about NAV and where can people see the NAV? Well, it's published on the website or even through the London Stock Exchange. And the NAV and share price are up a lot year to date, strong performance in both the net asset value and the share price, and still a narrow discount to NAV. And the stock Vietnam Holding can be bought through your brokers or through your platforms, and contact us if you need more information. So I think that's the last of the questions. I'll hand back to the conference coordinator.
Thank you. This does conclude today's conference call. Thank you for your participation, and you may now disconnect.